All right, team. Very good evening to you all. Sunday, 28th June 2026. I'll do it a little bit differently today. I hope you're all well. I figured tonight it could well be a day where I just don't really get as much time as I would like in the evening to really go through this the way I like to do so, in a lot of depth, in a lot of detail for you all. So I think let me do it a little bit sooner rather than later, allow you guys all to enjoy your Sundays. And then when you have your downtime towards the evening, where I would expect you'd all be professional traders looking at the market, just having a bit of a forecast for the day tomorrow, the week ahead, just to see where we lie, perhaps on the DXY, what's going on news-wise, what's the pairs looking like throughout the day. Then you might want to put me on in the background to see if your analysis matches mine. So that's what I will get on and go through today. Before I start, as I mentioned, I was on vacation, and as you do on holiday, you read a couple of books, some more important than others. But one book that I'd like to recommend to you all, The Psychology of Money. It's written by a gent called Morgan Housel. A very good book. It's not trading specific, but there certainly is elements in there that you'd be able to mirror over to investing and in trading in general. So just one that I would recommend, to be quite honest. I found that quite interesting, alongside the standard ones that I read when I'm away, just to refresh my mind as I look behind at the bookshelf, what had my intention. Trade in the zone, of course. I like to flick through that when I have the time. What else? I did have it here, just a sec. What was it? I think it's still in my bag. We'll keep it as that. The Psychology of Money and Trading the Zone, but definitely I'm sure you guys have read Trading the Zone millions and millions of times, but probably one that's gone under the radar, The Psychology of Money. Very, very, very interesting. Not trend specific, as I mentioned, but definitely one to pay careful attention to in a couple of chapters. Anyway, so let's get straight to the charts in terms of what we had. So last week was a very good week. And we forecasted that, to be quite honest. This time last week, when we had our live call on Sunday, forecasted that at the end of the week, there were very little conflicts in terms of the DXY had done what we expected it to do, make that higher high. Looking at the DXY chart now, we are still in that territory where the DXY is, of course, on that weekly time frame. We can see we've broken above that area. We've finally broken above, and we've continued to push above. So much like the same coming into next week, there are very little conflicts coming in the market. It's just when can we anticipate the turnaround on the DXY, and then when can we anticipate price to move back towards the highs? There's no real area that I'm seeing in the immediacy on the weekly time frame where I am forecasting price to give us a rejection from, in order for us to be looking for short positions, aside from the only caveat which I see here, the wick imbalance caused many, many weeks ago. Let me get the date for you in case you want to mark your chart similarly. But that's Monday, the 12th of May, 2025. That's come by way of, at some point in time, was a weekly order block. And in terms of that weekly order block gaining the confluence from that area, we have that nice wick imbalance. So the first question I'll answer, why a wick imbalance? Well, it tells a story in itself. A wick, particularly on that weekly time frame. Look at this wick here. Look at this wick here. It's telling us that price doesn't want to move above that area. Therefore, when price reaches that area, we can anticipate a rejection of some sort. Doesn't necessarily mean absolutely let's start selling as soon as price gets to a wick imbalance, because we must take it for what it is. It is just a wick, but it is giving us a lot of information that price is failing to break, close above the area. There was a previous weekly order block in and around that area as well. Therefore, as I've mentioned, if price gets to that area, then I am expecting some form of rejection. Not necessarily going to now create a lower low from there, but potentially a slight pullback on the DXY. That may give us a decent Asia range position, let's say, if we are looking at GU, EU, AU longs in terms of immediate long positions coming out of the market tomorrow, and prices up in and around this area. We see that lower time frame break of structure coming out of that wick imbalance. When you start to identify the chart that you want to trade on, and that looks good, and then go to the DXY to have a look to see if you have any confluence in the area to understand if it is, let's say, we could forecast a potential turnaround from that area, pair the two and two together, and in your journal, it then becomes a nice, probable looking setup, so long as the pair that you're actually looking to speculate on makes good sense. I'm not just going to go over to GU, AU, or EU and look for immediate short positions based on the fact that we don't have any setups on those pairs, but price at a wick imbalance. We're using all the information we have in our armory and we're using it to our advantage. If no setup is provided on those pairs, then this is just a wick imbalance in the market. And it is what it is. Perhaps you want to just trade the DXY. Anyway, I'm going off topic already. So the DXY, what do we have? So potential area where price could look to turn around. However, as I mentioned, primarily, I'm more forecasting that at some point in the near future, price is going to want to come up to this higher time frame weekly order block where price is still yet to mitigate. So this is in blue just so you can see it. If I place this on the market now, we can see how price has already traded out of those areas. And price is just making a deeper push into that area. And the only thing remaining there is by way of that wick imbalance. So there is reason to anticipate a turnaround at some point. Now, longer term or even shorter term, does that not make sense in terms of what we could well be expecting? We've made that higher high on the weekly time frame. So potentially now on the weekly time frame, we'll look to seek that higher low before the higher high continuation. So our thought process is absolutely at this stage in line with what the market is telling us. Now, if we head over to the daily time frame, not too much to scream about on the daily. We can simply see that the daily, we've just been pushing bullish for a very, very long period of time. And these little holdups in the market is where we'd be looking to identify those turnaround positions on the lower time frames, where we see the daily time frame didn't do too much at all. We've got wicks thrown to the high with a daily candle closure below the wick. And price then looks great on the lower time frames, particularly on our trading pairs that we're looking to speculate on. So more with that, we can then see how the vicinity, or rather, that wick imbalance is really, it is in the vicinity of where price action is at the moment. So there is, as I've mentioned, reason to anticipate a bit of a turnaround coming from this area. Pull back where? That's the question. Where are we going to pull back to before the continuation? So I've got some areas on the chart as you look to the left-hand side, the 4-hour time frame on the DXY. Admittedly, these order blocks, I have to be fair, they are kind of in the middle of nowhere. They're not supported at all by any higher time frame analysis whatsoever. As I've mentioned, daily time frame completely just bullish candle after bullish candle after bullish candle. No real evident pullback on the daily time frame, and that's replicated over on the 4-hour time frame, where we're not really getting those clear pullbacks where we can really say hand on heart in terms of the most basic term and the most basic price action, this being the higher high for a potential higher low. Is that the higher high for this to be the potential higher low for a higher high to come out of the market? So what I'm doing, I'm reacting to the points in the market on the DXY where price is reacting to, and if there is an order block in and around that area that makes sense, i.e. to the left here, there is no right for this order block to be in the market. This is just a 4-hour order block in the middle of nowhere. There's no difference between this 4-hour order block and this 4-hour order block. The only reason why this is now on the chart is have a look at the performance first and foremost of the 4-hour 50 EMA. The 4-hour 50 EMA is starting to come up towards price action as a result of price just pushing completely bullish. The 4-hour 50 EMA is lagging behind, but it has caught price action up. And we've come into this 4-hour order block that before we had an opinion on it, it was nothing. However, why are we getting a reaction from that area? I don't know. However, we are getting a reaction from that area. Therefore, we place an order block in the area and we add our confluence to the equation, 4-hour 50 EMA. Therefore, if price wants to start to dip into that 4-hour order block, potentially seek some liquidity by way of the 4-hour 50 EMA for a potential push up towards the upside, would that make sense? There's for us then to go down to the lower time frames, refine that 4-hour order block down and have a look at price action and structure on the 15-minute time frame to give us a bit of a clue as to, are we looking in the correct area on the chart? Now, a 15-minute time frame, what can we see? Well, we've had a push towards the upside. Again, I can't be 100% sure that that push has come from this area. However, prices come down into the 4 hour. We've seen that reaction from that, hoping that we would then break some lower time frame 15-minute structures, which we have. We've broken this structure point here, which certainly would have been, let's say, on the 1 minute time frame, absolutely would have been lower low, lower high, lower low, lower high, lower low, break of structure to the upside. Expect price to pull back down for that push up. So it makes good sense. However, price is still yet to come down into this 15-minute order block that actually, in my opinion, caused a push towards the upside. So it's down to us for wait for price action to come down to these areas, if you so please. Or in case you are looking to trade simply in line with most recent 15-minute structures, which I would say come first thing Monday morning, just allow price action to shake itself out. Of course, we take the weekend breakdowns with a pinch of salt, but it's more so to direct our eyesight to the visuals of what's going on in the market. Have a look to see how previous higher time frame candles have closed and what can we anticipate. However, what we can clearly see is in terms of a snapshot, we can say higher high created in the market. We gave price action the chance to then make a further higher high. What happened on the back of that? We broke structure points to the left-hand side, breaking structure point 1 that, again, we don't necessarily know if that is a structure, but it was a structure point. I would still say down here is the key structure point. So until we have broken this point in the market, I do believe we are still bullish. However, being intraday perspective, looking at, let's say, as I've mentioned, an Asia range looking trade, we are very much so low in the market created, lower high. For, in my opinion, this is the move, lower low, for potential lower high, lower low continuation. Well, will I necessarily get the continuation, or am I expecting just a move out of the area? Either way. Now, however, what I will be looking for is confirmation at this area for then the short down on the DXY for a potential GU, EU, or AU looking long, or if price wanted to gravitate back up to these highs, then it's exactly the same. However, at those highs, I'd be slightly more aggressive because I have those two areas. If I'm able to wait for my highest degree of entry criteria here on the DXY by way of confirmation, then up at this area on the DXY, if I'm wrong here, then I'm quite happy to be wrong here because this is pretty much last chance saloon based on my technical analysis. I'm in the last 4 hour order block that I can see is available. Up at those highs, it allows me to short from as high as possible. There are no other 15-minute order block up at those highs that is available either. Therefore, if I'm wrong at this stage, well, it's just one of those, which it's trader specific, whether or not you're happy to take the risk on that particular position. But again, you're not trading the DXY, you're using the DXY as confluence for DXY weakness potentially from this area to then take a position, let's say on a cross pair, to then take the benefit of the move, at least to move you towards break even. So DXY, long story short, it's still acting in line with what we had forecasted last week. It's still acting in line of good room towards the upside. However, the only caveat now that we have is that price is getting a little bit closer to that wick imbalance, of which we must admit that wick imbalance or that order block that was created was certainly responsible for this low in the market. Oops, if I can get my illustration, this low in the market. However, what we must still understand is since that low is created, we have, where's the screen gone? We have had an opportunity to make a lower high for a lower low, and we failed to do so. And in fact, what we've had towards the opposite direction is just a break of structure from most recent structure points that's created a low. So therefore, yes, I'm expecting a reaction, but where am I really expecting price to go? To the order block. We don't just trade wick imbalances. They're used as a confluence. We trade via order blocks and we refine those order blocks down. So intraday perspective, yes, potential short looking scenario coming out of the DXY. Longer term scenario, I am expecting still DXY strength to come out of the market, and we can see that even based on the 4 hour time frame, based on the daily time frame, and of course the 15-minute time frame, by way of which it's difficult to depict a key structure point towards the upside. Therefore, we do still have a good argument of actually saying, well, there's the move. And all of this is just intraday perspective stuff. back down for smart money concepts to take price back up to those highs. So that's what I've got on the DXY. Sorry to make that longer than probably it needed to be, but that's exactly why I figured to do this video a little bit sooner rather than later, so you guys will have the ability to watch it before market opens tonight. That's DXY. So we keep that in the market. And before we go any further forward, let's have a look at the news we have coming up in the week. So red folder news. What do you have? Nothing too juicy tomorrow morning or tomorrow in general, aside from what we've got. Retail sales yearly euro. So of course, high impact news on the euro. And then anytime the US dollar seems to sneeze these days, we are getting a move. So I'll be very vigilant on this as well at 4:30. And then going out for the week, it's the standard stuff that we would, of course, expect coming out of the US dollar as the week goes on. And we've got non-farm as well to take into consideration. But with that said, not to be fearful, it's just rely upon your technical analysis and understand before taking a position, where is the DXY? Is the DXY in a position where it looks as if I could get a reaction from it? Do I have room towards the upside on the DXY? If I can't actually forecast a reaction from the DXY short, does that mean that I can continue actually longing, or rather continue shorting the crosspair, because the DXY is looking as if it's just going to continue moving towards the upside? And that's really what last week was all about. If I couldn't find an area on the DXY, then perhaps the DXY was just going to, let's say in this scenario, just going to keep shorting based on this break of structure, pullback, and we continued shorting. Therefore, on a crosspair such as AU, where we took a long position from, I think it was after this market break, pull back into the area, and you see the order block, or you see the area just here where price would have pulled back into, then we took a nice long position like that. It's exactly the same. If the DXY looks as if it's going to continue to short, where can I jump on the back of a trade that actually looks good if it's going to continue to long then in that aspect? So we're just using the DXY, and me personally, just using the DXY as good looking confluence. So that brings us nicely onto AU. What I have for AU? Well, AU is becoming a bit of a bitter pill to swallow with AU. Funnily enough, I wanted to short AU from since God knows when, and then of course not able to get into a short, and I end up taking a long position, which thankfully came out trumps. However, it wasn't the position that I would have liked to take, but there we go. I'm not in the market to have a preference. I'm just here to make money, to be quite honest. So weekly time frame. I think that the cause of action has changed ever so slightly. If we put the DXY to one side for a moment and have a look at AU for a brief second. So I understand AU has come first and foremost into this higher time frame weekly order block, which we must take into consideration. Lower low in the market, lower high, order block created, price came in, made the lower low, price is now back up into that area, had the reaction. However, what I'm seeing in the market now is slightly different to what I have been seeing recently. And that's come to me as a bit of joy, really, because when you keep looking at the chart and you just think sell, 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 you certainly get into just simply sell bias. And I was quite happy to be able to actually see, just outright, just see without the technicals, what had been created in terms of a long. Now, looking at this weekly order block, we're now in it towards the highs. Now, why else do I like that? So why that weekly order block? Why not any other? So what I can see is a high was created in the market, price pullback, which was the first reaction from that higher time frame weekly order block. Price then actually made a higher high. Now, if we trace back to understand where that higher high came from, we have this weekly order block that you've seen it. Price is now in that area as we speak. Now, we don't just trade from weekly order blocks, we refine those areas down. And before I skip it and miss it, we've also now got the weekly 50 MA coming into the game. And why does that make sense? Well, we finally broke and closed above it. And since of late of rejecting, couple of closes below, and then that push above, we've remained above. So it's not for me to anticipate anything other than what the facts of the market is telling me. And that is simply telling me that price is trending above that weekly 50 MA. Therefore, if price wants to start pushing down, or rather pulling down into that weekly 50 MA, what can I expect? I can just simply anticipate price rejecting it towards the upside, and it has 5 trading days in order to do so. That doesn't mean price cannot on the lower time frames, and even so on the weekly candle. That doesn't mean that this is not possible. Of course, it is possible, but what my strategy suggests is that even when price is down here, I must expect for the week that this candle does want to gravitate towards that weekly 50 MA, and for the end of the week, the close of business on Friday, price wants to close above that weekly 50 MA. So I will always use it as a confluence until this weekly candle actually closes below that weekly 50 MA. And of course, the additional confluence by way of weekly order block towards the highs, where ordinarily, of course, I'm sure you've guessed it, I am expecting price to want to push out of that weekly order block towards the upside. So that down to the daily time frame. When we start to refine that daily order block down, again, I'm very rare. Well, I'm starting to do it a little bit more now just to get a nice looking picture of what's going on. If it's clear, I'll take it in consideration. If it's not, what I'll do, I'll just simply zoom chart just like that and understand what's going on in the most recent candles and the performance of the daily 50 minute. But I think it's relevant, so I'm going to include it. Hence why I wanted to have a little bit more time speaking to you all this afternoon. So at one point in time, I would have had price pull up into that weekly order block, break structures towards the downside. I wasn't expecting price to come back up into this area, this order block in particular, look for that continued rollover towards the downside. Hence why I was very much so sell bias on AU. So if we just have a quick snap back to the DXY, we were expecting perhaps DXY continued long-term bullishness. However, in the immediacy, we can understand lower time frames is indicating a sell-off from, I won't go by memory, sell-off based on the 15-minute time frame, and also the fact that we have been pushing bullish for a very long time. And perhaps at some point in the market, what can we say is that there are structure points, we could say, that are broken to the downside, and we have no clear structure points towards the upside that's telling us, well, we should be reacting from here. We should be reacting from here. It could be argued that we have a very much so a clear path back down to the key level where we would definitely be expecting a reaction from on the DXY towards the downside. So what could that suggest to us on the crosspair? And we'll start that on AU. So AU, that could then insight for us that we could be in the market to look for AU longs if it makes sense. So thus far, we've just been describing AU longs based on higher time frame analysis, break of structure weekly order block supported towards the upside by the weekly 50 MA. When we start to refine those areas down, what we thought that we could have had previously by way of break of structure, pullback, higher time frame weekly order block, lower the market created, expected price to come back for a lower low. And in fact, what did we have? Higher high created. So all of that to the left goes in the bin, and we start the process again. Higher high, price comes back, higher low. Where are we? In the territory that caused price to push up towards the upside. Therefore, once we use that daily order block again, start refining these areas down, if I've done it correctly, we are now trending in that order block. And of course, we are having a bit of a hold up. Why? Well, at the tops and at the bottom of trends, we will get those hold ups in the market. And then that brings me nicely to understand what is supporting that higher time frame analysis. We've touched on it, weekly 50 MA. What's keeping price against us? Well, look at the almighty trend towards the downside. That's expected. We understand what was going on last week. However, we've now traded into that higher time frame point of interest, whereby you guys know me, more often than not, I will be looking for a 4-hour candle closure above that area. In fact, 99.9%, I will be looking for a 4-hour candle to close above that area. I'll wait for that, and I'll simply be having high, higher low, look for the higher high. Can I anticipate that? Perhaps. Where can I look to exit or look to manage price by 4-hour 50 MA? Why? Well, that's the performance at the moment that is keeping price towards the downside. And when I look towards the left, I don't have any real reason to be putting in 4-hour order blocks to tell me, okay, then Charles, well, you're probably better off closing off here. No, I've got no indication of doing so, so I'm not going to do so. My first hurdle in the market is coming clearly at that 4-hour 50 MA. So by the time price gets there, if I have enough range for a 1 to 3, then more than likely I'll close that position out. I did it multiple times last week at even less than 1 to 3 and stacked very, very nice profits throughout the accounts based on just doing that. When price is telling me to close, I've just been closing of late. So that's what we have in terms of the 4-hour time frame. I think that looks quite nice to wait for that because what can we say based on the 4-hour? We can't at all say that we are in a bullish market at the moment, despite being in a point of interest where, of course, I'm with you. I want to look for long positions as well, but it's not quite ready yet for myself personally. We've had a low in the market that I could just about anticipate based on the bet or just about visual based on the fact we've had that break of structure to the left-hand side. So here, of course, is the low. I can't really make up that price made the lower high. All what I can see is price had a slight pullback on the lower time frames, and then we had that move towards the downside. My long position on AU was based on a 15-minute break of structure towards the upside, 15-minute order block. Price came back in lower time frame break of structure, took the long, which is just here from last week. Aside from that, I'll probably be doing exactly something similar based on the fact that because tomorrow is Monday, I will indeed be waiting to see how price is going to shake out. I'll be waiting for that 4-hour candle to close above that area, hoping then we have a range still to the 4-hour 50 EMA, because once price taps into that 4-hour 50 EMA, I am expecting price to potentially make that low in the market. Not necessarily close, but I mean, it can happen. For me to get rid of this daily order block, all I need is one daily candle to close below it. We've then made a lower low, and the whole thing's on its head. So therefore, it's very important what happens tomorrow. So hopefully, if we get that closure above this little structural area on the 4-hour time frame by way of bullish 4-hour candle closure, still give me enough range to trade towards that 4-hour 50 MA without actually tapping into it. I understand it is tight, but it can happen. It is a great confluence when price doesn't tap into your EMA of which you're using as a target. So therefore, that's what we're going to anticipate and plan for tomorrow. And then on the 15-minute time frame, we have to be extremely careful because at the moment, until we can identify what price is doing, so we can see a clear low in the market caused by what? This area here. When I retrace that area, if there is an order block up there, then that becomes a point potentially where you would want to be selling from. So I can't sell from there personally because I'm in a higher time frame daily order block. But what I can do is take an Asia range type of position based on the fact that structure is printing towards the downside. Just a moment. Structure is printing towards the downside. And of course, if I get an Asia range type of scenario like so, I can see we've had a clear break of structure to the lows. Price that makes a low of Asia, makes a high of Asia, prints in between, and then pops up London lower time frame break of structure. That, of course, is the trade down to fill Asia. So I would take a short position based on the fact of Asia range not taking into consideration higher time frame directional bias whatsoever, just 15-minute price action structure. However, I believe the better case scenario would, of course, be using that higher time frame directional bias, which at the moment, until that daily candle closes below that daily daily order block, I am very much so long bias. So what I'm going to need to do is wait for some structure points further to be broken, which in my opinion, the aggressive position would be not waiting for this structure point in the market to be broken, but ensure when you get there, make sure that you are break even before price gets to this area, because based on basic price action of the 15-minute time frame, we are still bearish. We cannot hide that. And what this 4-hour candle closure will give us is the certainty based on we would have that break above that area. It's as simple as that. Once you have the 4-hour candle close above that area, you indeed will have price action on lower time frames, printing higher highs and higher lows above the area. Simply then be expecting price to come back down. You'll be trading with absolute confluence and confidence that you've waited for structural breaks. And then you'll be trading up to that 4-hour 50 MA where you have a look at the 4-hour performers. And it's much of the same. I tell no lies, or I tell nothing new for you all. I assure you. So that's AU. I like AU. Either direction for the Asia range short, don't mind it whatsoever. For the long position, I do, however, need to see some areas broken before I get involved in that short position, despite there being an aggressive option available, because I think it's a long week. And what we have seen play out over the course of the couple of weeks is if you just exercise some patience and discipline in this game, you'll look after your account, which I go on and on and on and on about account preservation, manage your risk, manage your account, stay in the game, be there for when price action allows you to trade consistently based on what your strategy is, and then execute without any reservation or conflict in your mind whatsoever. And when that shows up, you're able to just do it, right? And when you're in doubt, that's when all the other monkeys on your shoulder start to appear. Should I hold this longer? Am I doing this correct? X, Y, and Z. Just execute in line with what you know, and what you know works as well. Having no question about what you're doing. So that's AU. I feel like I'm absolutely rabbiting, but I think it's all good stuff. GJ, let's talk about GJ. So I don't mind GJ at all. Weekly time frame, we're not getting too much out of it. I'll be honest, there's nothing at all in the weekly time frame. Top right hand chart, all I can see is price has been reaching for the highs. We do have room down to that weekly 50 EMA where I am still expecting a rejection from the area based on higher high, higher low. That is a higher high based on the candle breaking and closing above that area. So I'm expecting a higher low for potentially a higher high. Wouldn't be too far to admit. However, in the immediacy, so that's sort of long-term forecast. That doesn't really help us in the here and now. In the immediacy, what I am seeing is a really nice trading range, which more so down to the lows is still available. So although price closed below on the daily and on the 4-hour, below the daily 4-hour 50 EMA, I can still anticipate, well, that is a reason why I would indeed anticipate price to be driven further to the downside, where potentially I'll be looking for a long position, let's say, on GJ from this daily order block that's available. So your question is, well, why not this one? Well, price has mitigated that quite a few times over, and price has pushed off from the area. So this daily order block has done its job. Of course, refine that area down. I'm sure there is a 15-minute point of interest within that area. However, here and now, we've got a new daily order block. That, why I love it, there is still room. Price hasn't tapped it. So when price taps that daily order block, I'm expecting a reaction in that same day. I'm not expecting price to then want to come any lower. I want a reaction in that same day, to be quite honest. And for that to happen, we have to refine our areas down, as we always do, and refine within this daily order block. You can see just here that 4-hour order block at the lows, which we must have a look to understand why that makes sense. Well, price wasn't doing anything for a long period of time. Price then came into this area and pushed up. Therefore, when price wants to come back, I'm expecting a reaction where back up into that 4-hour daily 50 MA before continuing to respect the performance of the daily and the 4-hour 50 MA. So that's what I've got towards the upside. Let me just double check that those 50-minute order blocks, are refined in those areas, which no, slightly lower. So what I will be doing is, that's why they're not fully drawn across. Okay, I'll explain that. In terms of shorting, nothing by way of a daily order block aside from the one that we've already used. Therefore, once we seek to refine that area down, we're back up into this territory, which I don't mind because the 4-hour is very much so available. So if price wants to gravitate back up into this daily order block, looking for that lower time frame shift before pushing down towards the downside, it's actually not a bad position because we have higher time frame analysis on side. Excuse me, higher time frame 50 EMAs by way of daily, more so the daily, because it's more than likely by the time price prints up towards those highs, what you are going to see is a 4-hour candle closing against you, meaning that your 4-hour 50 EMA is then going to be a target for management, not so much using as a confluence to actually short from this area. What I mean is if price comes into this area now, I have the 4-hour 50 EMA and the daily as a confluence for the short. However, if price actually closes above that 4-hour 50 MA, it's no longer an immediate confluence for a short. It is a target because I'm expecting a reaction towards the upside. So that's the difference. Once price gets up here, instead of using this as confluence for the short as it starts to gravitate further towards the upside, it is now a target for management. So be very clear on how you're managing and using your your daily and your 4-hour 50 minute, especially the 4-hour, as it's more dynamic than the higher time frames. So we've spoken about shorting from those highs. We've spoken about a potential long from these lows, which I think is quite a good looking long. And in the immediacy, it's a little bit tricky. But what the first thing I'm looking at is this move, high created. Where was that created from? This 15-minute order block. Price came back down into it. And what's happened? Not only have we had a rejection, we've had price continue to print and actually print quite well in terms of basic trends on that 15-minute time frame, giving us nice higher highs, which at some point we must say, right, that's a break of structure. Therefore, what did we do last week? Came right back into that 15-minute order block, and then we had that long position, just like that, where GJ just continued to fly in and around those lines. So we are trending on the 15-minute time frame. Again, it is the weekend. Again, it's Monday coming tomorrow. So we don't hang our hat on intraday trends because this is all history. It's a previous work, much like all the other time frames. But the 15 minutes is very dynamic. So we don't think too much about it over the weekend. However, as I'm here with you guys, it's worth showing you exactly how you can seek. We've had that break of structure. We've also had a close above Asia highs. We've got that snap of this Asia, snap of this Asia. So it's a snap and a retest. What caused the break? 50-minute order block. Price came back in, lower time frame break of structure. And of course, we then made the higher high. So it's beautiful in terms of what you should be looking for textbook types of scenarios. Now, looking for a short from this mid area. Again, it's in the market based on there are no facts to support it. Let's start from that. But what we do have is a hold up on price action in and around this area, supported short by daily and 4-hour 50 MA. Therefore, I'm looking for the liquidity beyond that area to then understand, well, once we start breaching that 4-hour and daily 50 MA, I'm expecting liquidity to come into the market, potentially look for the lower time frame break of structure, and then use those confluence for the daily and the 4-hour 50 MA as confluence for taking an immediate short position. Of course, the best looking short position is to understand the intraday perspective. We are very much so bullish, depicted by one illustration. However, what we could then seek to understand is where in the market created the most recent high. Here it is. So therefore, this area in the market based on higher low should well be broken first, give us that low, pull back into the area. We can now trade with confluence, understand that we are now trending alongside at least the 15-minute time frame, but notwithstanding, we are still also trending with the daily and the 4-hour 50 MA and also out of a 4-hour order block. The only reason why I don't really like that order block is because it hasn't done too much. You know me, I want an order block to show me that, okay, if we're going to come down and make a low, if this order block is something that I should hang my hat on, should I not be seeing some breaks or structures to the downside? I don't have that, therefore I have to tread slightly carefully when looking to trade out of a 4-hour order block that hasn't really done anything, right? If you're asking me the difference between this order block just here, or you've guessed it, this order block right up at those highs, look at the difference. This order block up at those highs has clearly broken structure points to the left-hand side, which once price gets there, I want to be involved. However, from this order block here, you can see price hasn't really broken the lows. Of course, it can well come back. We do have support by the EMAs. You get the picture. There is a difference in illustration. Therefore, there is a difference in expectation. Therefore, there must be a difference in how you manage that type of position. And that's really all I have to say about GJ. The reason why I like the shorts in all scenarios, as I've mentioned, haven't tapped into the higher time frame daily order block, haven't tapped into the refined area of the 4-hour as well. So I think it's all systems go. Although we haven't made a low coming out of that area, perhaps the trade that could be executed from that 4-hour order block could well be the position to actually take price towards the downside. We shall see. So I like that. You've got the best type of way to really be looking to take that position, to be trading alongside lower time frame at least, breaks of structure. This 15-minute order block gets refined. Why I like it as well, we're not so much refining down the 4-hour order block, but what we are doing, we're refining down an area in the market, and that's by way of 15-minute. I just want to double check that that is the only available negative. No, it's not. There is another 15-minute order block slightly higher just here. So that's also telling me not only is it a 4-hour order block that I should be treading carefully with, I have two 15-minute order blocks. Therefore, I revert to my most relied upon entry criteria. 15-minute bearish engulfing candle, allow me to start the process again by way of 15-minute order block, lower time frame break of structure, and then I'll be happy to take the risk based on waiting for all of that. Up at this 15-minute order block, I might be slightly more aggressive, but this one here, I most certainly have to wait for. If not this break of structure, then I definitely 100% need to wait for that to then deliver me with this, to then deliver me with that lower time frame break of structure coming out of that area, reset the whole thing again by way of lower time frame, point of interest, order block, and then look for the shorts. So that way you'll be trending alongside 15, at least 5-minute breaks. 15-minute bearish engulfing candle will hopefully wipe out all of that intraday lower time. Well, not hopefully, it will wipe out 1 minute, and more so when it's engulfing, it will wipe out the 5-minute trend towards the upside as well. So you have some confidence if you don't want to wait for that break of structure. However, if you do want to wait for the break of structure and then you also have that type of entry criteria, then you're very much so trending in line of textbook. So textbook setup, textbook entry, take the position. It is simply part and parcel of trading. So, blimey, that's GJ. Where are we next? EU. Let's take a look at some decent cross pairs, and I'll have you guys enjoy the rest of your afternoon. So, what do we have? EU. I think I remember saying last week, EU was, what did I say? I said EU was the weaker of the pound compared with the euro. Therefore, I wanted to short euro, and I would more so want to take a long on GU. Nevertheless, it's a new week. Let's see where we are. So, that was it. We closed below the weekly 50 MA on the weekly, and also we closed below the higher time from directional point of interest towards the upside on EU as well. So I was thinking of continued EU shorts, hence why I was very hesitant to take EU longs. That's what I remember saying. So higher time from analysis, we're still there. Weekly order block supported short by weekly daily 50 EMA. So at some point in time, I would love to see price return back towards those highs. And I'll be looking for shorting in line with that weekly time frame. That's all good stuff. That's pretty much self-explanatory. What I will do is zoom out so you can understand that. I believe now, as a result of this, in fact, last week's candle was a pretty good candle for us based on the way we trade. Break, and break of that area. So we are, in my opinion, very much so in line with a bit of a free-for-all down towards these areas. So that's euro weakness, all depending upon potential DXY long-term strength. Does that make sense? I'd say so, based on our anticipation of what we have forecasted with the DXY. Anyhow, so higher time frame, that is explained. Daily time frame, we don't trade from weekly order blocks. We want to be refining those areas down as low as we possibly can. As I mentioned, not really concerned about weekly and daily structure or trends. However, when it's nice and easy, when I can see those clear breaks of structure where price was making higher highs and higher lows, here's a higher high in the market. Price has now certainly broken below most recent price action to the left, meaning that however you want to paint it, whether it's coming from here or here or here, we have now had a clear break of structure downside. When you get a low in the low of the market, what are you expecting? A lower high, where from? A valid point of interest above, looking for that. Weekly refined daily and weekly 50 MA supporting price to the downside. Have a look at the daily performance of the daily 50 MA to understand whether or not that makes sense. Daily 50 MA, what were you doing of late? Well, price tried to break above, we failed to do so. Price tried to break above, we failed to do so. So in the event that price comes back up to that daily 50 MA, what should I be expecting? short, short, short. And then when I start to use all of that information across the 4 hour time frame, what's the trend on the 4 hour time frame? Not talking about the higher time frame analysis, weekly, daily, the 4 hour, bullish or bearish. We've made a low in the market, followed by potential lower high, followed by lower low. Lower high is definitely confirmed. Again, as a result of the DXY moving towards the upside without any real terms of pullback, we've just had a free fall of on EU, which doesn't necessarily mean that anytime price starts to push up on EU, we should be looking for higher high, higher low on the lower time frames. I know it's very tempting, and I've put those order blocks in on the market, but we must still understand what phase of the market price is in. We already understand if we are going to anticipate a weakness of the DXY, it's going to be very much so short term. That short term weakness on the DXY could well so mean that you'll be looking at short-term long positions on EU. Does that make sense based on what we have an understanding about? A short-term long position on EU would simply illustrate a lower high being created in the market. Wherever that lower high may well be, it doesn't necessarily mean we're creating higher highs. Of course, it's going to look like it on the lower time frame, but really, really pay attention to what's going on across all of the board and understand what's the trend on the 4 hour time frame. That's where I start my trend analysis. Therefore, 4 hour trend is incredibly bearish despite having breaks of structure. So I have put it in case of those of you that are tempted for those types of reversal trades. We can expect it, but let's have a look to understand what makes better sense. We've got a key structure put in the market, and it's difficult to understand it based on there not really being any higher time frame analysis to start guiding our analysis. So we might have to be more reactive as a side to being more proactive, because I can't just put 4 hour order blocks. Well, I can. We can see what makes sense, because I certainly can put these in on the market, but it's just pretty illustrations on a chart for no real given reason. We've got a 4 hour 50 MA. That's the only reason why I do like that at the moment. If price wants to come into that 4 hour 50 MA, where would be a 4 hour order block above it? Perhaps here. So we'll start from that element only. Then when we start to refine that area, I'm hoping that that's in and around this area. That will certainly make my life a lot easier. A little bit higher. So that suggests I should refine that area up, and that's why it's difficult to anticipate when price is just free falling without having those breaks of structures clear as day. This is what you could end up getting into. Just putting 50-minute order blocks on the chart everywhere. So my suggestion would be wait for price to develop from an area first and foremost. Wait for those breaks of structure to take place towards the downside, and then you'll be in the game you'll be able to withstand price action by which is already creating those patterns on the lower time frame, because everything else is already aligned. It's just when to execute based on the lower time frame. So what I'll be looking to do is understand what I've already put this in the market here as a key structure point. Is that guesswork? It could well be. However, what we've had is a low, potential lower high confirmed by a rate of lower low in the market. Price then come up, and it's then asking the question, well, if you're right, is price going to react to this area? Not only have we had a reaction, what else have we had? We've had some pretty nice breaks of structure towards the upside that we could say price was holding above that area. And then we finally come out of that market, made the low again. Potentially price could come up, give us a lower time frame break of structure, and then we'd be looking for a short position down. So that 15-minute order block isn't valid, but it's in the market to suggest that that is where price has reacted from before. Now I can put the remaining 15-minute order block in on this chart, and what I'd love to see is price start breaking more structure points come London Open tomorrow morning. For then price to tap into that area. Perhaps we'll also have an Asia range like so, whereby we'd be able to have as confluence price breaking that Asia low, or if it's not or price trading back down towards that Asia low, if price just prints up without breaking. However, if price actually snaps Asia lows after London Open, so that will look something like so. Breaks Asia low, then comes back. That's going to look like a textbook looking position. Break of structure towards the downside, looking to fill the next Asia down. Easy peasy lemon squeezy. We like that. However, of course, we've got that 4 hour order book that we just put in on the chart. So probably my best hope really on EU might be by way of Asia range and how Asia range is going to look. Because being honest, no hard time frame bias guiding that. Better case scenario, get a tremendous looking bearish engulfing candle that breaks structure towards the lows. Then, of course, we can hang our hat on where that break of structure come from or came from, and we can highlight the order block that caused it and then start to refine those areas down. But we're intraday traders and we love to trade pretty much immediately. So that's what I'm going for at the moment. As you can see, it's probably not the best, but definitely by way of direction, it makes good sense to be looking for continued shorts on EU, in my opinion. Longs, I'm going to stay away from describing the longs, despite having an understanding of why you could see it, because I just don't feel that they are the best looking setup, the longs. So we'll continue on. UJ. UJ, very, very, very conflicting. Hence why I'm going to stay away from it. UJ's giving me every sign technically that I should be looking for sells. Now, based on the DXY, can I be looking for sells? Yes, absolutely. But based on the DXY, how long could my sells really last for? Well, I don't particularly know because we've got some areas in the market where price could look to react to, but based on higher time frame, it looks as if it could free fall all the way down. Therefore, UJ, what once looked quite conflicting, could well look quite decent for a short position down. Why? Higher time frame, weekly order block. So we take each pair as it is, and then we can bring in the DXY to try and support the buyers for thinking so. Higher time frame, weekly order block. Price is still failing to close above it, therefore I'm keeping it on the chart. Refine that weekly order block down. We're within a daily order block. Again, price is failing to break above. Therefore, I keep it on the chart. Then, moving towards the 4-hour time frame, I'm expecting a bit of a hold up simply because we're conflicting across the market. DXY wants to move higher. However, UJ is in that hard time frame weekly order block where we can anticipate price to move towards the downside. Unfortunate for myself, I am only sell bias on UJ as a result of being in that higher time frame point of interest, regardless of what my internal thoughts could well be. US dollar continued longs, it doesn't mean I should be now looking to long against my technical strategy. It means I have to wait for a weekly candle to either close. Well, it's as simple as that. I have to wait for a weekly candle to close above that weekly 50 MA, or better still, if there wasn't that weekly order block, then I'd have to wait for a daily candle to close above the daily 50 MA. However, I don't have that scenario at the moment. Therefore, I must simply stick to my favored strategy based on what the technicals are telling me, and that is shorting out that higher time frame analysis. Therefore, can I short now? That's a question. We are within, in fact, let's get rid of that. At some stage, we were within a nice 4-hour order block, which has been, we closed above it at some stage in the market. I'm sure one of these candles closed above it. Anyhow, it doesn't matter because I have to take it off the chart and I need to wait for structure to be broken to the downside before I take that position anyway. The reason why I'm happy to wait, well, look at the amount of pips that could well be available. Close to 500 pips on the chart, ready to come back down to that higher time frame point of interest. And that's not even refining it. If we start to refine that down towards a 4-hour order block, then you're looking at 700 pip return. Of course, I will not be in the market to hold that, I'll be very honest. But a 1 to 5 or I'll be optimistic. 1 to 10 is very, very, very doable, I'd say, with that pip range. Now, as I've mentioned, I can't sell this just yet. You can look at the 4-hour and you can't, well, maybe you can. Can you tell me what type of trending market we're in? All you have to do is look to the left and understand what is UJ capable of doing. It's capable of making higher highs, higher lows, and higher lows and absolute higher highs, higher lows and absolute high low. Excuse me, higher lows and higher highs. Therefore, when I see price doing this in the market, I'm just sat back waiting for that to occur. The first break, perhaps ideal case scenario, we break that 4-hour 50 MA to the downside as well. That's definitely going to help the scenario. Then after that break, we've got the bearish 4-hour engulfing cam to the downside. Wait for price to pull back up. Order block selection up at those highs. Refine that order block down from the 4 to the 15. Lower time frame break of structure, which we'll have by way of 4-hour candle closing from that area as well. And then we'll simply have to just set an alert, sit on our hands, and wait for price to return back up to those highs for us to take a lovely looking short position. And just before doing so, couple of clicks up to the DXY to understand, right, has the DXY emitted similar signs? And probably what you'll find is by the time you've waited for that, maybe the DXY would have given you a bearish 4-hour candle closure from that area as well. So it's all going to look rather nice in terms of symmetry and correlation across the chart. We hope, so long as Mr. Trump doesn't tweet anything detrimental to our trading day, I think that could be a nice, good-looking setup for the week ahead. And we just need to hope that the daily candle doesn't close above that daily order block, because that really will then throw some conflicts into the market, which is going to be quite annoying. But for now, as I see it, it's looking nice, very clean. We've got at least 12 trading hours tomorrow for us to see how that daily candle is going to close. So that's UJ, very much so short bias until further notice. US dollar CAD, US dollar CAD. In fact, will I skip US dollar CAD? We do have better, which I wanted to show you guys. In fact, what I'll do, if I stop that there, and then first thing tomorrow morning, I will go over US dollar CAD in terms of a breakdown, because I wanted to explain a couple of elements on US dollar CAD, but I don't want this video to be too long for you guys in terms of the breakdown. So what I'll do, I'll record this separately, and then tomorrow morning, live 7:30, then I will most certainly be looking to, of course, go over all of these pairs that we always look to speculate on. Anyway, team, I think I've kept you there for long enough. As always, thank you very much for your time. Appreciate it. It's a Sunday, but if you can, have a good old listen to what we've had to say. If you skip to the end, Psychology of Money, Morgan Housel, very good book that I read whilst being away. Not trading specific, but very, 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 very good elements in there to do with money management, which mirrors nicely over to trading. There is a couple parallels in there that you can take from it, just investing long term, and even as a day trader, understanding that although you have the access to trade every day, that's not really investing. And there are some parallels to take. So have a good read. I'm sure you can download it for free somewhere and read it when you're bored or on the toilet. But until tomorrow, everyone, take good care. All the very best for the rest of your evening, and good luck with your trading journey over the next couple of weeks. It's been a tricky start to the week, but not week, sorry, tricky start to the year. But just looking at how price is shaping up, it just goes to show, if you're able to stick to your price action, stick to your analogy and your setup and strategy for long enough without getting fed up, when you do have the very much so trend that you will get, nothing at all in life is like that. And we must understand that, guys. So when you're loving trading in these elements and everything is going right, when you get this element here, that's when you don't quit. That's when you wait for price action again to go in your favor. Honestly, it's really important that you understand that trading is not how it is imagined to be. It is not linear, just like everything else in life. Honestly, take the parallels from a good couple of books and understand we're trading price action that goes up and down. So why on earth would we be expecting this type of result? We will have those types of results. That's just me and my lovely illustrations. But hope you get the message, everyone. Very good evening to you all. Take care, and I'll speak to you all very soon. All the best. Bye-bye.